And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here to take you through to the closing bell. A global simulcast. It starts right now. Tim Stenovec joins us from the radio room. Carol Massar has the day off. Emily Graffeo in for her, and Katie Greifeld on assignment at the JPMorgan Healthcare Conference in San Francisco. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube on another topsy-turvy day, Tim, in financial markets.
Romaine, I got to tell you, I'm watching your mouth move, so I know you're talking. We're having some audio issues here. That's my excuse. We don't have any audio from you guys. I do want to talk, though, while we get that worked out. We're certainly seeing some buying in the S&P 500 and the major indices today, but I think it's fair to say the Russell 2000 is the star of the show today. Elena Popina on our equities team noting to me earlier today that we're actually seeing it's on track for its 7th straight day of gains today, and that hasn't been seen in years.
Yeah, that Russell 2000 already up 6% year to date, outpacing the S&P 500. And of course, it's interesting to see the U.S. equity market ending in the green on a day that started with some Sell America headlines. Clearly, U.S. investors are looking to buy U.S. stocks today.
And we should point out, too, I mean, despite all of the focus today here on Jay Powell and the potential effect here of the latest Molotov cocktail thrown through the window of the Eccles building here, we did see some interesting stories coming out of the retail space. The ICR conference down in Orlando, you had Abercrombie and Fitch, American Eagle, Urban Outfitters presenting on their holiday numbers, and that was, well, somewhat of a disappointment for investors. We saw a big drop in those shares, and also keep an eye on some of the credit card issuers, the Synchronies, your Capital Ones and Amexes, if you will, on the back foot all day long because of a missive by President Trump on Truth Social about potentially capping credit card rates at 10%. We get the closing bells here in New York on this Monday afternoon, and it does appear to be green across the screen despite some of the anxiety out there in financial markets. The Dow Jones Industrial Average up about 0.2% on the day to a record high. The S&P 500 up about 0.2% on the day. That's also to a record high. The Nasdaq Composite adding about 0.3% on the day. The Nasdaq 100 just basically unchanged, but the outperformer, modest outperformer on the day, that's the Russell 2000, a closeout on the day, Tim and Emily, up 11 points or 0.4%.
Well, taking a look at the deeper dive in the S&P 500, interestingly enough, a pretty even split right down the middle on the S&P 500. 250 stocks did move higher. 251 stocks moved lower.
And we take a look at the circle here, the 11 sectors in the S&P 500, and you get a sense here of the complexion of this rally. Financials, which had been the world beater for the last few months, that's the red on your screen, down 0.8% as a group. And tech, not really the big lift. Some of the big names out there like Apple did manage to post some sizable gains, but the real star of the show today was consumer staple, industrials, and materials.
Well, I want to take a look at some of the gainers on the day today. Let's start with Alphabet shares, the parent company of Google, up a cool 1% on the day today. The company entering a multi-year deal with Apple to power Apple's AI technology, including Siri. The next generation of Apple Foundation models will be based on Google's Gemini models and cloud tech to help power future Apple intelligence features. Apple will maintain its privacy standards by running its AI services on consumer devices or via private cloud compute. And the Google tech will help support a new version of Siri due this year. I think it's really notable given that these two are competitors when it comes to the iOS and Android operating systems. So the challenges in the new world of AI produce strange bedfellows. Also, taking a look at shares of Wal-Mart, speaking of technology, and I say speaking of tech, because Wal-Mart is going to be the newest entrant in the NASDAQ 100. That's going to be on January 20th. That's up a cool 3% today. Walmart will join the NASDAQ 100 later this month, this after AstraZeneca is exiting. The market cap of Walmart, about $940 billion, just shy of a $1 trillion market cap, would be the first retailer to reach that milestone. And finally, Sun Country Airlines today surging. A little M&A news. This, their highest intraday level since February after the company, along with Pure Allegiant Travel, announced a definitive merger agreement. Now, Allegiant is going to acquire Sun Country. It's a cash and stock transaction. It's an applied value of $18.89 per Sun Country share. Shares of Sun Country Airline Holdings today higher by about 10.6%, Emily.
All right, thanks, Tim. Now, for the decliners, I'm starting with Abercrombie and Fitch. It was down 18%, the lowest since early December, after the apparel retailer said it now sees net sales up 5% for the fourth quarter. And that was down from previous expectations of up to 6%. It may be a case here of just expectations that were too high, considering the fact that the stock was up 62% over the past 3 months of Friday's close. So we did see investors maybe taking some profits on these expectations getting pared back even just slightly. And of course, the big story today in financial stocks is all about Trump's tweet here, or Truth Social post, that he called on credit card companies to cap interest rates at 10% for a year. This is a move that could wipe out billions in profits for one of the banking industry's biggest businesses, Capital One. Our very own Paige Smith telling us that this is the company really to watch here, that we would be affected by this in the biggest way, considering that they're the largest U.S. card issuer. The stock tumbled as much as 8%, biggest intraday decline in about 9 months before paring losses slightly, but still finishing the day around 6%. Visa, of course, another very big stock in this industry. It's interesting, you look at what analysts had to say. Mike Mayo, an analyst at Wells Fargo, he said the cap proposed by the president could wipe out earnings from cards for a year. Now, he wasn't signaling out Visa, but of course, important to note here that that stock was down about 2%.
All right, let's take a look at the yield space, and I want to pay close attention here to what's going on the longer end of the Treasury curve, your 30-year yield. Remember, we started this day with a lot of concerns about some of the policy proposals being floated out of Washington that had a huge impact on the Treasury market. We saw selling across the curve, though that selling did abate as we got deeper into the session. The net result of it all is not a whole lot of movement on the short end of the curve, but that 30-year yield is down about 2 basis points here on the day. Your 10-year yield also down by a similar, higher by about 2 basis points on the day. Your 30-year yield also higher by about 2 basis points as well here. And you have a lot of folks coming out right now, including the strategists over at JPMorgan, talking about the potential for further steepening of that curve as some of those policy proposals maybe scare away some investors from taking any long duration bets here.
Yeah, I think it's fair. I was personally a little surprised by that we didn't see more of a bond market reaction, but we will wait and see.